Today, we're fortunate to be joined by Jorge Ganoza. He's the CEO of Fortuna Silver Mines. They're a global intermediate gold and silver mining company. They have operating mines in Peru, Mexico, Argentina, Burkina Faso, the Ivory Coast, and an exciting exploration development stage project in Senegal. Jorge, welcome to Ron's Basement.
Ron, a pleasure to be here, and thank you for the opportunity to speak to your audience.
Well, it's always great to have you here in the basement, Jorge. And I wanted to start by getting your take on the silver market from a silver miner's perspective. I know your company now has pivoted to producing a lot more gold than silver, but you really, got your start on the silver mining side of things. And it seems to me that the silver price, the silver market, it seems to be, defying the reality of supply and demand. And I was just curious from your perspective as someone has decades of experience with silver mining, when does this when do things change in the silver market? Is it becoming increasingly difficult for the miners to find cost-effective silver deposits?
Yes. Now, when we think about silver mining, and the supply side of primary silver, right? We need to understand that about 1/3 of production is what comes from what we call primary silver mines, right? Or the balance comes from large as a byproduct of base metal mining.
Okay.
Copper mining, zinc, lead mining, So the big global producers of silver are the large copper and base metal miners, right? So when we think of on the supply side of the primary silver producers, and we think about the likes of whom Fresnillo and other companies like that. Yeah, I mean, over the last decade, inflation has eaten away a significant margin. Just to give you a sense, back in 2011. Fortuna was largely a silver producer, a primary silver producer. Over 60-70% of revenue came from silver for us in 2011. Our all-in sustaining cost on a per ounce basis in 2011 was roughly $10 per ounce. We produced silver at an all-in sustaining cost of $10 per ounce. And in 2011, we were selling silver at $30 per ounce, $27 per ounce. So we had 3 times margin over our all-in sustaining cost. That's why you invest in mining, right? There was a really big price incentive to open new mines and search for new deposits. Fast forward to today, or a little over a decade has passed, and silver is trading at $23. But if you look at the AISC for the silver industry, I'm sure it's closer to 20, right? $19, on average, right? So we're working for thin margins on the silver side. So on the dynamics of supply demand, in general, precious metals are tricky. I know that there is always the argument that silver stocks are really low, but when I think of drivers for precious metals, I can only think of financial demand. I can only think of financial demand. and as a main driver, right? And until we see a well-structured uh, bull market on gold, silver will follow.
Yeah.
And silver will follow on steroids. Yeah,
Jorge,
that's what silver does.
I like to call silver is like the dramatic little sister. You know, it'll throw a fit and really move when the gold price goes up.
Yes, you know, I think of this as a wavelength. No, you have the full wavelength, and gold traditionally outperforms silver. I'll say 80% of the time throughout the journey on the wavelength. And there is a 20%, 30% of the time when you are in that bull leg, no?
Yeah. Yeah.
That silver just provides some crazy performance and opportunity for returns. But it's only a short window compared to gold. No, I believe gold, for the most part, is outperforming silver, and then we get to this dynamic when there is a well-established bull market, gold is going up, and then just silver goes through the roof, right? Yeah. And that's why we love silver, because it provides for that opportunity from the perspective of a miner who has to be mining in a good market, in an average market, and in a bad market. I personally, you know, I like the offshoot of silver, that 20-30% of the time, but certainly gold provides more stability on throughout the precious metals price cycle, right?
Yeah, yeah. And you've pivoted your company in the last decade or so, 5 years, to become more of a gold producer, and that's starting to pay some dividends. I think just recently you released your 2023 production numbers, which were record-setting. Any comments on what you accomplished in 2023? I could brag about you because I'm a big fan of the company in terms of what you've accomplished over the last, 4 or 5 years since I've been invested in the company. But it feels like 2023 was a very pivotal year for the company as well, in terms of the Seguela mine coming online and just overall production numbers.
Yes, and let me expand for a minute on what you started with, which is our transition from being largely a silver producer to being largely today more of a gold producer with a silver component. Back in 2004, 2005, it just made a lot of strategic sense for us to focus on silver. And bear in mind that in 2005, silver was trading at $3.80. It was so unloved, right, that we saw a niche and an opportunity because no one was looking for silver. No one cared about silver. We had a few companies back in the day, still active, that were already active. Pan American Silver, what was then Silver Standard. Of course, the Hecla and Coeur d'Alene, what was Coeur d'Alene at the time. But outside of that, no one cared much about silver, right? So we found a niche, an opportunity, and as we had little money and a very small team, we leveraged what we knew the most, which was the jurisdictions of Mexico and Peru, which coincidentally are the two largest, or were at the time, the two largest silver producers in the world, right? And we were quite successful with that. In 2020, 2021, we, as you pointed out, made a big change, a big strategic shift, and open up more to gold opportunities. After 15 years with a strategy, we decided to change. and strategies have to change, right? So why did we change strategy? For two reasons. One, Fortuna in 2020 was not Fortuna in 2004. Fortuna in 2020 had a large pool of expertise in the company with, mining executives and mining professionals from different walks of life with all sorts of varied experiences. And so we had more financial and human capital available to the company. So we started seeing more opportunity flow and more opportunity flow with quality assets in the gold space. Because, Ron, we don't play the price side. An investor can do that. An investor can time, when do I think silver is going to move, and I invest in silver. And if I'm wrong, I'll sell and sit on the sidelines and trade. I will trade the silver and gold. But as a miner, you cannot do that. Once you're invested in a mine, it's a long-term commitment. So we started seeing more and better opportunity flow in gold than in silver. So we still love silver. I mean, we still seek for silver opportunity, but it's just a fact that we see far more opportunity flow in gold. And so it has been natural to start acquiring and growing these gold assets and growing our business on the gold segment. Today, gold accounts for 75–80% of revenue, silver for around 15%. So time changes, the company changes, and the strategy adjusts to where we believe we can extract more value. And like you pointed out, we have in our journey become now roughly a 500,000 ounce gold producer, right? Which I believe establishes Fortuna as a competitive mid-size player in the precious metal space.
So, and 15 years ago, please correct me if I'm wrong, you were about a 50,000 gold equivalent ounce producer. So over the last 15 years, you've grown gold equivalent ounce production by 10 times.
Yes.
And I want to add, as part of my notes here, as I'm preparing for this, and I think about you, and I think about the executive team at Fortuna and the company. One thing that I kept coming back to was you play a long game, meaning you make long-term decisions. At least that's my perception. You aren't managing the company. You are managing the company quarter by quarter and day by day, obviously. But when it comes to the big decisions you make, you're looking out years, maybe even a decade into the future. I think that can be demonstrated by your what now can be called wise decision to pivot a big portion of the company's production into gold. I think it's demonstrated by your decision a few years back to expand into West Africa, which is now starting to pay some great dividends for the company. It even, as I was listening to you in a recent interview with Chris Marcus on Arcadia Economics, I think it's demonstrated when you talk about you're expanding the leach pad at the Lindero mine in Argentina, and I heard you say it's a $40 million project, if I remember correctly, and it's something that you maybe could have spread out over a long period of time, but from a strategic perspective, it made more sense to just swallow it all at once, get it done, and then you'll enjoy benefits from it for the next 10 years. Is that accurate?
Yes, and it's a $41 million project, and it just makes good technical sense to execute it all at once versus spreading it out over 2-3 years. This is a difficult enough business to make it even more complicated on yourself, and we want to provide our mine team at Lindero flexibility and for the stacking sequence and the leaching sequence and all of that. So that's why we decide to take a a difficult decision, but it's a good decision for the long term. You know, I always reflect on something that, you know, the most challenging, difficult part of a CEO, not just me, I believe everybody on my shoes is confronted with the same, is and particularly today in the gold space, where it's difficult to find investors. What we find a lot is traders and speculators. No, nothing wrong with that. But it's difficult to find investors in the space today. I think that changes, no? But today the mining space, I believe, is dominated by the investment scene is dominated by, you know, as I said, speculators and traders. And so it's I have to listen to my investors. I have to listen to our shareholders. And then I need to weigh that against what I believe and we as a team believe are the long-term decisions that we need to make for the business, right? Which not necessarily all the time are well aligned with, you know, what a trader or a speculator expects, right? Because sometimes you make decisions that take, you know, years to mature.
Right.
You know, our move to West Africa was controversial. And now, you know, the biggest portion of our cash flow and growth opportunities is coming from West Africa.
Yeah.
Our lowest cost, West Africa is the lowest cost, one of the lowest cost jurisdictions in the world. You know, and in this industry, you have to focus on what you control, which is cost, right? Compare the cost structures for North American, Latin American mines versus West African mines, and the answer is quite evident. West Africa, because of its grades, because how the industry has matured over the last 2 decades, offers opportunities, unparalleled opportunities to operate at very competitive low cost. And that's what's key in this business. You know, in the first half of 2020, in the second half of 2023, our Séguéla mine produced at a gold at a cash cost of under $400. And we're guiding now 2024 at a cash cost of, you know, around $800 and the AISC of around $1,100, right? Today, the global mining industry average cost of production from an AISC perspective is $1,400.
Yeah.
Right. So we're producing well below the industry average, right?
Yeah. And I want to point out to our viewer, the Séguéla mine in the Ivory Coast, Côte d'Ivoire, you built that from the ground up. It was built on time, on budget. I also want to point out, and please correct me if I'm wrong, Jorge, because you're the CEO, but the amount of ore that's been running through the plant has actually has exceeded expectations in terms of the throughput, and the ore that is running through the plant is coming in at a little higher grade than was anticipated. Is that accurate?
Yes, it is accurate. You know, in every design, the engineering team, the design team always builds in some spare capacity or safety cushions on the design, you know, and once in operation, you know, it is always an expectation that you can capture some of those, and then some others become bottlenecks that then you have to work to remove. But remember that we are always working with estimates, no?
Sure.
Rock hardness, grade, those are not calculated. Those are estimated, right? There's always a range of due to the uncertainty of the mineral resource, rock composition, and everything. So considering that, there is also always some spare capacity and cushions, safety cushions, built on every component of the design. Well, at Séguéla, we not only delivered on time and budget, like you pointed out, but we have been able to capture all of those opportunities in the design. And we're currently guiding or throughput capacity for 2024, 20% above nameplate capacity.
Yeah.
And I believe that with a bit more effort throughout 2024 and some debottlenecking, our team will be able to capture even some more.
Wow.
Right? So that's very meaningful. 20% above nameplate capacity with just 6 months of operation, I think is very meaningful. And on the grade side of things, in the second half of 2023, yes, we have been able to get positive reconciliation. What does that mean? That the gold we extracted from the areas that we defined for production was higher. We extracted more gold from those areas. That was because we had a conservative estimate to begin with. And I like that. I value that. We tend to be conservative and not overly aggressive when we estimate tonnage and grade. So that's also provided a big push for the mine in the second half of last year, and hopefully it'll continue throughout 2024.
Yeah, I would, my observation is that you are conservative and strategic in terms of, two kind of guiding factors that I observe as you, but then you deliver, Jorge. I want to point that out. A lot of silver companies tried to pivot into gold production, and I won't name names, but there's a big list of silver companies that tried to move into gold production that have not had anywhere near the level of success that you've had. With Séguéla, there's also a pretty big opportunity for exploration potential as well, finding some new deposits. And I know you've had some success over the last year drilling.
Yeah, I mean, the exploration potential at Séguéla is tremendous. No,
yeah.
I think the better word to define it, tremendous. And I believe there are years of exploration work to come here. And we have a lot of low-hanging fruit there, and there are more targets that we can get to, right?
Wow.
At least at this stage. And with respect to your initial comment just now on how we've been able to deliver and whatnot, this is a very difficult business. We operate in developing nations, challenging jurisdictions. As I said, we don't calculate things, we estimate things, right? Resources, reserves are estimated. So we're always having to make decisions with little information. And it's a difficult business. And but we learn from our mistakes. We try to keep mistakes small. We do make decisions all the time, and we're making mistakes all the time. But we just try to keep them small. And when there is a problem, we make a big effort to learn from that problem. And I have to say that we work with a diverse, well-seasoned team of mining professionals. And our mines are in developing nations, in what some would term as challenging jurisdictions. But I think we've proven consistently that we are well structured and suited to operate on those and be successful and thrive on those. Yeah, absolutely.
Yeah. Well, Jorge, I'm an old accountant, so I'm always looking at the financial statements. And another thing that I've always found comforting regarding Fortuna is the fact that your philosophy of conservative management also applies to how you manage the company's finances. And I want to point out, I believe in 2023, I know late in the year, you paid off another 40 million in debt, but I think there was another almost 40 million that was paid off earlier in the year.
Yes, yes. With respect to capital allocation, bringing down debt is a priority for us. We're not a highly debt leveraged company, Ron.
Mm-hmm.
Our debt to EBITDA today sits at around 0.3. No, our debt leverage ratio, net debt, no, to EBITDA is 0.3. Or in our case, our covenant allows us to go as high as 3 times EBITDA,
Mm-hmm.
right? And we're currently at 0.3, as I just discussed. But I believe that a mining company needs to be run with a fortress balance sheet because, again, we have no pricing power, right? So, we're coming out of a capital-intensive couple of years with the Seguela construction. And now that we are harvesting cash flows, the first thing we're doing is bringing down our debt. So we paid $40 million in the third quarter of 2023. We paid again $41 million in the fourth quarter of 2023. And I think, at least in this price environment, you should expect to see us paying another probably $100 million throughout 2024. And with that, really taking our debt to a very negligible level. Something that we are always paying a lot of attention to is opportunities for share buybacks. That's a way to return to our shareholders. And throughout the year, we'll weigh the options of paying down debt, for example, versus allocating some capital to share buybacks and be opportunistic on that. I believe, or as a shareholder, that's something that we want to do. Yeah.
And again, I want to point out to our viewer who's with us right now that over the last year, Fortuna paid off almost $80 million in debt. That tells us something about the financial health of the company in terms of the cash flow that you're generating, in terms of the harvesting that you're able to do now because of the moves you made into West Africa. And that becomes even more important as we're in this higher interest rate environment as well, that those debt balances are being significantly decreased, and they were not high to begin with. But, we're talking about, depending on the price of the metals, the prospect of possibly paying down a significant amount of what is the remaining debt of the company. That's a very good sign from a person who's like I said, an old accountant.
Yeah. Again, I believe companies should not be run with high leverage. That's proven to be risky over the history of this industry. And more to that point, I believe a mining company should be run with a fortress balance sheet.
Yeah.
Right. And that's where we are. No?
Yeah. Yeah, because like you said, you cannot control, unfortunately, Jorge, we wish you could, but you cannot control the price of the product that you produce, right? There's a market that takes care of that.
Yeah, we don't have pricing power in this industry, and also that's why we like it, right? Because it's as an investor, investors can profit significantly when we see these price moves. Now, from our perspective, we have to make sure that we have a company that can thrive throughout the precious metals price cycle, and but I will not negate that we all feel quite rewarded when we see these crazy price swings that come every so often.
Yeah, yeah. Well, we've had, and I'm just going to ask few more quick questions of you. The gold price has been pretty good lately. I think I saw the other day that for the last 10 weeks straight, on a weekly basis, gold had closed above $2,000 per ounce. I think as you and I are recording this on January 30th, 2024, gold is somewhere around 2,030, 2,040 per ounce. Is that do you consider that a good environment in which to continue to harvest gains for the shareholders?
Yes, yes. I think we're running a good business in with gold at $2,000.
Hmm.
Yes, but having said that, uh, we think of gold in terms in nominal terms as being at a historic high, and it is in nominal terms. But again, adjusted for inflation,
Yeah.
the margins of the industry have been crushed over the last decade.
Yeah.
So, you know, uh, my job is to set up a company that can thrive throughout any price cycle. And at $2,000, we're making a decent business. But we think of the $2,000 thinking of probably what happened in 2020 or a decade ago in 2011. And again, they are when prices got to $1,900 in 2011, our margins were 2-3 times
Yeah. Yeah.
over cost. Today, our margins are 30% over cost.
Hmm.
Right?
Hmm.
So, you know, I don't complain at all about $2,000, but I also have to say that it's not the same business. And I believe there we have an explanation why, with gold being at 2,000 at the nominal highs, we see, for example, or industry indices like the GDX
Yeah.
being close to all-time lows, no?
Yeah. Yeah.
Uh, because I don't think we find the incentives to go purchase the mining equities.
Hmm.
The prices are likely being supported, Ron, not by money managers and the large pool of global funds going to the gold. I think there is clear evidence that the price of the gold is being supported by central banks.
Yeah.
And central banks, they buy gold and they buy probably some silver. But you will not see a central bank buying a mining equity.
Right.
When a money manager managing billions of dollars, if not trillions, decides to go into gold, he will buy gold, he will buy silver, and he will put a portion of that into mining equities, right?
Yeah.
So we're not seeing that capital deployment from those money managers, right? It's just
Yeah.
institutional buying from central banks, and I think there's been a pattern over the last period of time that's well documented. So we tend to think of gold at this record high, and then look at the mining equities and be disappointed with the performance. But really, the margin is not there for the mining business, no?
Hmm.
Again, 30-40% margin, and mining is a difficult, risky business. You want probably, as an investor, higher margins than 30-40%. So
Right.
I find there an explanation why we see apathy and underperformance on the mining equities compared to a $2,000 gold. The answer is in the margin. The margins have
Hmm.
been squeezed over the last decade.
Yeah. Inflation ate away a lot of that margin bit by bit by bit. But I will still argue that Fortuna stock, my opinion only, is undervalued. When I look at your balance sheet, Jorge, and I take the book value of your assets, and I deduct the debt that the company has, which is coincidentally, as we discussed, going down. After you pay off all the debt, there's $1.3 billion in net tangible assets left over. And the market cap of the company probably sits around $1 billion right now. I mean, that means for investors, and again, this is my opinion, that means for investors, for like every dollar they put into the company, they're getting $1.3, $1.30 of assets with no debt attached to them. And those assets are generating cash flow and net income. And those numbers I just quoted were based on the September 30th financial statements. But the value proposition, even in this, what I would say is depressed sentiment level for the precious metal mining stocks, there are some companies, including Fortuna, that are doing very well. And I think offer a value opportunity, like I just explained, but also a growth opportunity as well.
And going back to what is it that we want to present as a value proposition to our investor is, I would say, optionality.
Yeah, right. Yeah.
If you have a thesis that gold is going to shoot to 2,500, 3,000, or whatever price.
Right.
If you have that thesis, while your thesis materializes, all sorts of things are going to happen between today and then. And in this market, you will have to have tolerance for some wild price swings, probably to the downside, before it gets to where you believe it will get. And in the meantime, you want to be positioned in a company that can tolerate those price swings while your thesis materializes.
Yeah.
And I believe we offer that because Fortuna is set up in a way that today offers a value proposition. I concur with you. But also it's a company that can thrive, in different price scenarios and adverse ones.
Yeah.
And we're set up also to profit if, the thesis materializes and we see even higher prices, right?
Right.
I am a miner. I'm not a gold bug, right? And I need to perform with $3,000 gold or $2,000 gold or $1,500 gold, right?
Or $3,000 gold, right?
Or 3,000 or 4,000 or but I need to perform throughout the precious metals price cycle and offer the opportunity to the investor to have a vehicle, a company where you can, pursue your thesis. And we miners do provide certainly far more leverage, with risk attached, but the leverage to the metal, if gold moves 10%, today that's gold moving to, $2,250. If gold moves 10%, miners move 50%.
Right. Yeah. But what a lot of people refer to as an asymmetric risk opportunity, the opportunity for growth far outweighs the opportunity for downward price movement, although things can go down, right? You and I know that, but the opportunity on the upside, especially when you have a company whose management team is executing, delivering, making smart, long-term strategic decisions. That's what I think about when I think about Fortuna. Jorge, as always, it's great to speak with you on behalf of our viewer who joined us today. Thank you. Did I forget to ask you anything, or is there anything you want to mention before we wrap up?
No, we have an exciting 2024 ahead of us. We have challenges and many opportunities as well. So it's going to be an interesting year. We have our new project, Diamba Sud. We have exploration opportunities at Séguéla that you mentioned. And we also have, one mine running short on reserves, or San Jose mine, where we are currently doing exploration and have some, exciting targets that we continue to pursue. So, just the challenges of the business and the strengths of having a diversified portfolio that help us move forward, right?
Yeah. Yeah. And I want to point out as well, when you talk about the San Jose mine in Mexico, that there is always a chance or a possibility that a great discovery could be made. And I wanted to ask you as well, would $30 silver make a difference? Does that make a difference in the life of a silver mine by chance?
Yes, I mean, we have exhausted, in 2024, we'll have exhausted what we have as economic resources today. So we did this planning exercise in late 2023, no? So with the price and assumptions that we put into our estimates, we exhaust economic grade in 2024. But that doesn't mean that we don't have more available resources. We do have more available resources that all of a sudden would be economic in case we see, higher price, $30 silver.
Yeah.
On top of that, as I always say, our geologists are the first ones to arrive, and they are always the last ones to leave. And we currently have a well-funded exploration program at San Jose, where we are aggressively pursuing some opportunities. I can give certainly no guarantees with regards to potential success there, but
Right.
that's the beauty of the business. No, we have the
Right.
opportunity, and we have to drill, and it's only the drill bit that's going to tell us if there is something else for us there or not, and we're pursuing it.
Yeah, yeah. And I want to mention as well in that regard, we talked a lot about the Seguela mine in Cote d'Ivoire, but is it Yaramoko mine in Burkina Faso? You had some pleasant surprises over the course of last year there, didn't you?
Very much so. We upgraded guidance for that mine in the second half of 2023. Our original guidance was to produce around 100,000 ounces of gold, and we came in at about 117,000 ounces of gold. So significantly higher than what was our original guidance for the year. And for 2024, we are guiding, in excess of 110,000 ounces of gold. And 2025 is looking good as well. Remember that when we acquired Roxgold with the African portfolio back in 2021, the Yaramoko mine was set for closure in 2023, right?
Right.
So it is through the exploration success that we not only had a stellar 2023, but are also looking at a very strong 2024 and an exciting 2025.
Yeah.
Right. So, if we were having today a conversation in 2021, you would be asking me, so Jorge, the Yaramoko mine is set for closure 2 years from now in 2023. What do you think about the exploration potential? I would have said the same thing I'm saying to you on San Jose. We have legitimate targets, we're drilling, but we need to let the programs run and see how successful we are. Well, the team at Yaramoko has been successful and expanded, not only replaced, but expanded some of the resources. And, here we are at the end of 2023, early 2024, looking at 3 additional years in the life of mine.
Yeah, yeah. So very exciting exploration potential between your 3 West African projects, right? Burkina Faso, Ivory Coast, Seguela, and the Diamba Sud project, which we didn't really talk a lot about. I want to ask you one final question, Jorge. I want to zoom back over to Argentina in the Lindero mine. This leach pad expansion program, could that impact future production numbers in terms of any potential increases, or is that being done just to kind of maintain what needs to be done at the mine to keep things, I guess, on budget?
The leach pad expansion was factored in since the feasibility study of the mine for the 3rd year of operations, and it only makes more real estate, more surface area available for irrigation of cyanide irrigation of ore. So that expansion does not mean that we are expanding production or expanding facilities. It just provides real estate for the leaching patio, no, the leaching pad.
Gotcha.
Having said that, you know, slowly but steadily, we are capturing opportunities, debottlenecking, and achieving higher and higher throughputs at that mine with more efficiencies. Argentina can be a challenging operating environment because of the macroeconomic distortions in the country. It's a country that's running with almost 200% annualized inflation rate. And that causes these distortions in the economy. But in spite of that, the team has done an excellent job capturing, you know, operational opportunities, efficiencies on cyanide consumption, efficiencies on sulfuric acid consumption, and you know, efficiencies on you know, tire consumption for the large trucks and things like that.
Okay. Okay. Jorge, thank you. You've been very generous with your time with me this morning and with our viewers. I'll look forward to catching up with you in a few months. I think you'll have the 2023 annual results coming out sometime in March, and we can talk about that. In the meantime, if people want to learn more about the company, they can go to fortunasilver.com. The stock symbol in New York is FSM, and in Toronto, FVI. And thank you, Jorge. We'll look forward to seeing you back in the basement here soon.
Thank you for the opportunity, Ron.